Hi, thank you for joining our Financial Wellness No Judgment Zone Money Minute. Today we're going to be talking about spending plans and what a spending plan is. This is going to take place of that dirty word I like to call budget. Budget is so restricting. Our spending plan we're going to show you is going to make it a little more flexible and easier to follow and easier to stay within. So what we know that 84% of Americans have a budget. Yay, that's awesome. What we also know is that 83% of us overspend on that budget. So how do we fix this? We fix it with what's called a spending plan. This is something that's going to be flexible so that as you change, as your income changes, as your life changes, your spending plan or your budget can change too. And this is really going to help you really focus not only on your income, not only on your expenses, but also on your goals. Your financial goals are so important and they need to be tied into your spending plan. And so today that's what we're going to talk about. I'm going to walk you through the steps of how to create a spending plan and how to reach your goals. And it's so simple and it's going to really change the way you look at your money and how you spend it. So when you're creating a spending plan, the first thing I want you to do is I want you to look at your past spending. Go out to either your credit card or your debit card, whichever you do your main spending on. And I want you to print out your statements. If you use both, print out both statements. Print out about 3 months worth, the past 3 months. Go through that. Where's your money going? You should know where your money is going. Are you spending it on frivolous things? Are we spending it on our needs? What are we spending our money on? That's your first step. Really dive into that. Really look at that. I would say at least 3 months worth. And then what are your priorities? List them out. What are the things that are the most important to you that you spend your money on? What are your priorities? These are going to be different for everybody. We are not going to all have the same priorities, values, goals, none of it. We are all going to be different. This is all going to be tailored specifically to us. And then create some categories. So when I think of categories, I'm going to think of like car. And so our car is not just going to be the car payment. It's going to be the gas for the car. It's going to be for the maintenance for the car. It's going to be the insurance for the car. That is one category. We're talking about our car. Then I have one that's kids. This is going to be daycare, school, sporting events, clothes they may need, all the things that my kids need. That is a category. So figure out where you need to spend money. What are the different categories that are best for you? And then make a date. I do not care if your date is a weekly, monthly, quarterly, yearly date. Set it and be strict. Always have the date. You need to know where your money's going and how your spending plan is working. If we are not sitting down with our money on a normal basis, we have no idea how we are doing. So make sure you set a date. Have a date with your money and go through the spending plan. Go through what you are spending on a normal basis so you can understand where your money is going and how you are using it. And to make adjustments along the way, I'm going to show you this spending plan. It's a 50-30-20. We're going to get into it here in a little bit. And it's going to really show you that it can adjust along the way. It does not have to be strict. It is not like, you hear the word diet and it's so hard. You're like, okay, after about a week, we fall off because diets are so strict and so hard. Your budget doesn't need to be. Make it a spending plan that ebb and flows with you. Adjust along the way. As your life changes, as income changes, as bonuses happen, things can adjust. And that is the beauty of a spending plan. So step number 1 is we really want to confirm our income. So this is really with the starting point. You need to know, what are you making? What are you bringing in before you can spend it? Don't just look at just your paycheck. If you have a significant other that you share household income with, take into account their income. If you have a side hustle or you side jobs on the weekend, take that income into account. Do you have rental property? Take that income into account. Any investments, anything that is bringing money in, take all that into account. Make that list. And then we're going to calculate it. This is going to be your take-home pay. We want to know, what are you taking home? How much after taxes and deductions? That is the number that you want to work with. You want to work with your net income. So once you have the net income, now you're going to look at what are some other ways I make money. So now there are the irregular income, right? So the bonuses, maybe it's a tax return. Maybe you do seasonal work, you do some gardening or and you do Christmas trees at Christmas time, whatever it may be. Maybe you have seasonal work. Take that into account. And any other income that you may get just here and there, take that into account as you work for it. Take your net income as your main, and then make sure you know what times a year, what are those other incomes about, just so you know what to do. And then also you should know how frequently you are getting paid. So do you get paid weekly, bi-weekly, monthly? You need to know this so that when you are setting the date to pay your bills, you know when you're getting paid, right? Easy peasy. This is easy stuff. And now we want to do our expenses, right? So we talked earlier about categorizing them, but now I also want you to look at them in two other ways. So we're talking about a fixed and a variable. Your fixed bills, these are going to be the things: your house payment, your car payment, you have a personal loan, anything that has an exact payment date, a payment amount, your utilities, your credit card. These are the fixed amounts. Variables, these are going to be things like your groceries, your gas. They change every month. They're never the same. Those put into the variables. Eating out, shopping, those types of things put into your variables. Figure out what is a set amount that is paid on certain dates, and figure out what are other expenses that you have to pay or want to pay. Things like grocery, gas, clothes, going to the movies, those types of things, and how much those cost. Now, this is going to be a hard one, but I really, really want you for at least 30 days to record every expense. It does not matter how small. Even if you go to the gas station and you get a $2.99 pop, let's make sure we are tracking that. So at least for 30 months, 30 days, at least for 30 days. This way we can know where the money is going, and we can really track it. We can really see, ooh, I am getting low on my wants spending. I need to really adjust that halfway through. So at least give yourself 30 days as you're working on this plan to track everything, so you know where you're at and where you stand on the spending plan. We talked earlier, reviewing our bank statements. This is going to be crucial. Every time you have that date with your money, print out the bank statements. Let's really see where it's going. Print out your credit card statements. You need to know where all of your money is going. That is the first thing you need to know to understand your finances and how you are spending money, or how your family is spending money, because this may not just be a you thing. This may be a whole family thing. And if we work together and we understand where everybody is spending money and where we are spending money, we can understand how we can use it later on. And I talked earlier too about how our spending plan really ebbs and flows with us. So make those changes as you need. I'm going to talk a little bit later about things like daycare. So I'm not going to have daycare forever. Right now I have daycare, but I won't have daycare forever. And so I can change that category when I need to, when that life change happens. So making sure that we are changing the categories and changing our spending as we need to. And now we're really going to talk about the wants and the needs, okay? So your needs, these are going to be the things that are your everyday expenses. You have to have a roof over your head. You have to have running water and electricity. You have to have food on your table. You have to have a cell phone right now. In this day and age, unfortunately, we don't have house or landlines anymore. So a cell phone, it really is essential to be able to communicate. But these are the things that you have to have in order to survive. These are your needs. And then the other things you need to categorize are as your wants. And this are everything else: the dining out, the extra clothes, the going to the movies, any of your subscriptions. I am talking Hulu, Netflix, Disney Plus. All of those are a want and not a need. We may think we need to have them, but we do not need to have them, right? So we need to categorize those into our wants. A little side note here, that is a great way too to start to find some extra wiggle room, is really pay attention to your subscriptions. Even though you're paying $2.99, $14.99, $11.99, $5.99 here and there, and they seem to be small amounts, those add up. So really, when you're making those dates with your money and your finances, really also pull up all your subscriptions. You can just go to I go to Apple whatever you may have. And I see where all of our subscriptions are going. Cancel the ones you're not using. I mean, you can save a decent amount of money if you are making sure that you are constantly checking those, because how easy is it for us to say, I want this 30-day free trial, you got to put in all your information. We forget our 30 days is up, and now they're charging our card monthly and we completely forgot about it. So making sure you're paying attention to stuff like that, it's a good tip. We really want to prioritize our needs over our wants, right? We all know this. And again, as our life changes, just making sure we're changing with it. So here's the 50-30-20 plan. So what you really want when you have that final number of your take-home pay, you want 50% of it to go to your needs, 30% to go to your wants, and 20% to go to your goals and your savings. Now, when I talk about this, these numbers are not exact. They can change with you. So for instance, because I pay so much in childcare right now, 50% doesn't always cut it. So now we have to go, I bumped that up to 60%, but because I bumped that up to 60%, my wants are gonna have to be a little bit lower now. So they're now down to 20% because I really wanna try to keep 20% for my savings and my goals. Now, you hear that 20% for your savings out of your take-home pay, that's intimidating, right? And that's not what we mean. Take that 20%. This 20% can include your retirement payments. So who's paying towards their retirement? I hope every single person that's watching this is saying, I am. It is never too late and it's never too early to start paying into your retirement. So go ahead and do that. But you can take that, and that is part of your 20%. Who is paying off high interest debt? Most of us are. When you're paying off high interest debt, that payment as well can be a part of your 20% for your savings. And why? Because you're saving for your future by getting rid of that debt. So we are helping our future, we're helping our goals by getting rid of that debt that we have, that's hovering over us. So consider those two things into your savings, and then the rest of that 20%, put that towards any goals that you have, an emergency fund, travel expenses, that type of thing. We're going to talk here a little bit about goal setting. So the last step in this whole process is going to be, what are your goals? What are your wants? A big thing that I like to do is called SMART goals. So these are specific, measurable, achievable, relevant, and time-bound. So when you're making a goal, I don't want you to say, I need to save more money for the future. There is nothing that is tying you to that. There is nothing making you save more money. But if you have a goal that is, I need to save $500 in 6 months for a down payment on my car. Now we have a SMART goal, okay? It's a specific goal. I need a specific amount for a specific thing. It is measurable. I need $500. It is not, I need money for, I need $500. It is something that's achievable because I have gone through and I've had my date with my money, and I know how much I can set aside for the next 6 months to achieve my goal of $500. Okay. And it's relevant because I need a car, and it's time bound because I'm setting out 6 months. I need it in 6 months. I don't just need it in the future. I need it in 6 months. So setting a SMART goal for yourself, or SMART goals, multiple, is the way to go. This is how we need to do it. But also looking at your short-term and your long-term goals. So long-term, we're talking about our retirement, the long haul, the long things that we need. In our short-term, we're talking about things like our vacation. Maybe it's that down payment for the car. These short-term goals that can be achieved quicker. But you want to know all the different ones that you want, and then prioritize them. Put them in a list and number them, rank them. What is most important? If your retirement, your long-term goal is the number one, let it be number one. That's what you focus on. And then your other ones you focus on as you can. If you need to save that money for the down payment for your car, make that number one, because we need to get that done. That has a end date. It's something I need done. And just like we did with our spending plan, we are reviewing and adjusting these regularly. Set a date. Same time, we are going to set one big date with all of our finances, our goals, everything is all going to be together, and we're going to get all of this done to make sure that we are staying on top of it. We're reviewing our goals to make sure, are we where we need to be to hit our goals in the time that we need to hit them? Are these goals no longer something I am needing, no longer a goal that I have? Let's get rid of them. Let's reprioritize. Is something else needing to take precedent over my first prioritized goal? Let's do that. These are things that you can do. Remember that this is tailored specifically to you. As you create your own plan, steps 1 through 4, remember that this is you. This is not anybody else. This is for you. Thank you so much for joining us. If you have any questions, please reach out to me at partnership@uoficreditunion.org, and we will see you later.